Tom Lee has been making some wild predictions for the rest of 2024. Some bold claims about what will enable investors to do extremely well, maybe even leading to early retirement for some. So in this video, we will talk about what his predictions are, and maybe even more importantly than that, we will discuss some top stock picks that he has. You may have noticed that I have had a short break from this channel. The uploads haven't been as frequent, and that's just because I got called to jury service here in the UK. And in my spare time around that, I just prioritized the main channel. But I am back now and we will be posting every single week. Tom Lee is the head of research at Fundstrat Global Advisors, and he has a track record of making very bold, yet mostly accurate market predictions. For example, at the beginning of 2023, he came out and predicted that the S&P 500 would rise to 5,200. And this seemed incredibly out there at the time, and many people were extremely skeptical about this. But guess what? It happened. So he has had a lot of success in outperforming the market, and he is probably one of the most, if not the most, respected Wall Street analysts out there. And that's why I care to hear what he has to say about what's going to happen next, because like I said, a lot of the time it is very accurate. Of course, I don't think that anyone should just copy blindly what he's saying to do. I think you should always do your own research, but it is definitely interesting to hear. So let's start off with perhaps more of a conservative prediction that he has, and then we're going to move on to some of the predictions that he has that may lead on to much larger gains. The first thing that he is expecting is that the S&P 500 will rise to 5,800 by the end of the year, and this will be due to good, strong earnings, and also the fact that there is trillions and trillions of dollars in cash on the sidelines waiting to enter the market. And he also thinks that the S&P 500 will basically triple and go to 15,000 points by the end of the decade, by 2030. And like I said, he has been right on his S&P 500 predictions many times in the past. So if the index does get to 5,800 by the end of the year, this would be equivalent to about a 5.4% return, which doesn't sound very much, but actually, in 5 months, which is the period left before we get to the end of the year, that is a pretty substantial and pretty decent return. And if his predictions come true and the S&P reaches 15,000 by 2030, then that would be a 173% increase, which is equivalent to someone putting in $5,000 and then getting $13,650 approximately back. So based on these predictions, he really does think that an S&P 500 ETF should be a core holding in everyone's portfolio. I don't know about you, but I personally do follow this. I have an S&P 500 ETF, one that is available in the UK called VUSA. And right now I'm up on that position by about 26%. And it kind of just sits there in the background of my portfolio and just accumulates over time. So now we must move on to the more bullish predictions that could actually lead investors to see even higher gains. He's thinking that there will be a 30 to 40% opportunity in a 10-week period. So you may be asking, well, what stock is this that he's thinking this will happen to? What asset class? It's small caps. He thinks that there's going to be a small cap rotation, whereby small caps will see a larger increase than the rest of the market. Now, obviously, it's important to actually understand why he thinks these things are going to happen and not just take it at face value. So I did some further research, and the reasons are as follows. He stated that small caps are heavily shorted and very undervalued. And he said that the current run that we are seeing in small caps, and you can go and look at a small cap ETF and you'll see that over the past month or so, they have done pretty well. But he is saying that run up that we've been seeing is actually really small compared to historically, and there is much room still left for them to run. He's also stating that when the Federal Reserve do cut rates eventually, I know we've been waiting for a very long time for this, these cuts will benefit small caps much more than anything else, as money will just start flowing back into them. And like I said earlier on in the video as well, he is noticing that there is a lot of cash on the sidelines waiting to re-enter the market, and this will again fuel the growth of small cap stocks. So now we must ask ourselves, okay, well, what small cap stocks? Because clearly there are thousands and thousands out there. Now, he doesn't say any in particular really, but what he does focus on is the Russell 2000 index. The Russell 2000 is often used as the benchmark for small cap stocks in the US market, just like the S&P 500 is used for large cap stocks in the US market. And the particular ETF that he is focused on that tracks the Russell 2000 index is the IWM. And he thinks that the IWM will outperform the rest of the market, especially when the Fed cuts the rates. So let's just compare the S&P 500 to the IWM ETF for a minute here. So what you can see is the S&P 500 is shown in blue, and the IWM, which is tracking the small caps, is shown in this purpley pinky color. So over the last 1 month, like I was saying, the small caps have actually done particularly well, and you can see it has outperformed the S&P 500, which has remained relatively flat. If we zoom out to a year-to-date picture now, we can see it's slightly different, and actually the S&P 500 has outperformed. So that's what Tom Lee is saying, that actually this small run-up that we've seen in the IWM, or small caps in general, it's actually pretty small if you compare that to the historical run-ups that these ETFs have actually seen. And therefore, he thinks that there is still a lot of room for growth. If we expand to a 1-year period, the IWM has underperformed the S&P 500. 3 years, a similar thing. 5 years, you can see, basically what you're seeing here, 10 years, what you're seeing is that these small cap stocks or the small cap ETFs tend to exhibit much higher volatility than something like the S&P 500. And by the way, I'm on a platform called Seeking Alpha. If you want to try this out for 7 days free of charge, I'll leave my link in the description below. With that link, if you decide to then sign up, and it's a fantastic platform, I use this a lot for my research, you will get some money off as well. But you can see with the IWM that there is larger swings in either direction. It swings larger in the upward direction, but also fast and larger in the downward direction as well. So if you don't like that volatility, if you're not going to rest easy at night with that volatility in your portfolio, it might not be for you. But the reason it can move so quickly and so fast in the upward direction is because it has more of those stocks that grow more easily. They can see much faster growth under the right macro conditions. And under the right macro conditions, for example, if the rates were cut, the IWM can definitely outperform the S&P 500, but over a very, very long period of time, the S&P 500 is more likely to outperform these smaller cap positions. And you can see here some of the top positions held in that ETF. We have some companies that maybe you've never heard about before, but you can see their sector here, the asset class, and also the market value and the weight, the percentage of the ETF that they're actually taking up. And if we ignore the cash and or cash derivatives and we look at the top 3 by percentage weighting stocks in this ETF, in the IWM ETF, you can see we've got Insmed, we've got FTAI Aviation, and Vaxcyte as well. And actually these 3 that you can see these on the screen now, they've done particularly well over the last 1 year period. Insmed has gone up by 271%, FTAI Aviation 209% basically, and Vaxcyte 73%. So the question is now for us investors, is it worth us putting some money into some particular small cap stocks, or maybe an ETF tracking the Russell 2000 index like the IWM? Do let me know what you think about that and whether or not you are doing this in the comments below. But the next prediction that Tom Lee has is all about our favorite topic, artificial intelligence. He is forecasting that companies will spend a whopping $3.2 trillion annually on AI technology. And this will be to boost productivity and to address the labor shortage that we are seeing. And this, of course, will make those tech stocks that integrate AI into their business model go parabolic. That is what he is predicting. And he has gone as far as saying that in the future, the tech sector will make up as much as 50% of the entire S&P 500 index, which seems absolutely crazy, but I also agree that this is very possible, especially with the growth that we are seeing in some of these big tech companies. But then again, we come down to this question, okay, well, AI and tech stocks, they're going to do well according to Tom Lee, according to many analysts actually. I think so as well, not that I'm an analyst, but anyway. But what AI tech stocks in particular? Well, he is very, very bullish on Nvidia in particular. He describes this as a generational stock with substantial influence. And he says that Nvidia is easily one of the most important ways that investors investors can get exposure into artificial intelligence, into the AI sector. And he points out that the AI sector is in very early days, which I could not agree with more. We are only at the very start of this AI revolution that is going to take place. So investors that worry that they're too late to invest into an AI company, this is not financial advice, but I really don't think that's the case at all. I still think it's incredibly early. This is going to pan out over decades to come. And Nvidia is a stock that Fundstrat hold in their granny shot portfolio. You might ask, well, what is their granny shot portfolio? That's a very interesting name, but it's basically their stock picks that they almost think are no-brainers. You know, they have to have them in there. It's a core portfolio of the best, if you will. A lot of investors think, okay, well, Nvidia has done extremely well recently. It's very expensive right now, and there's no way it has more room to grow. I've spoken about this, I think, on this channel before or on my main channel before, whereby I think that actually Nvidia is not expensive right now at all. Tom Lee agrees. He thinks that although many people think it's expensive just by looking at stock price, it actually isn't. He thinks that Nvidia are simply offering something to the market that is not only in very high demand, but something that no one else is doing, or at least they're not doing very well, and therefore there is a lot of upside left. So Nvidia clearly have significant potential. You know, they have substantial and growing demand for their AI chips. They also have high revenue. They are very strong fundamentally, and they could really benefit greatly from the projected annual spending on AI technology, which is to address the labor shortage. As more companies increase their AI spending, the amount of money that they're willing to spend on artificial intelligence, Nvidia are primed and ready to take a large amount of that. Again, for full transparency, I do own Nvidia. It's not one of my largest positions, but I do plan to carry on adding to it. He also says that he likes AMD and Cadence Design because these two are highly correlated with Nvidia. I personally don't hold either of these as individual holdings, but do let me know if you do in the comments below. Now, there is another stock in particular that he is speaking very highly of at the moment, and he thinks there is great potential in, and that is Super Micro Computers, ticker symbol SMCI. They specialize in the development and manufacturing of high-performance server and storage systems. And they have grown so much in terms of stock price and market cap in such a short space of time that they have actually gone from being a small cap stock to a large cap stock, and they've been removed from the Russell 2000 index. Earnings have been incredibly strong for SMCI. They've been exceeding expectations in their most recent earnings, and actually they came out and announced a 200% increase in revenue year over year, which is absolutely incredible. It's also worth noting that Super Micro Computers have a very strong relationship with no other than Nvidia, which is of course one of Tom Lee's other stock picks. And actually, Super Micro Computers, that is a mouthful, uses Nvidia's GPUs and other technologies in their products to stay at the edge of AI, to stay at the edge of the market. Another stock in their granny shot portfolio is Apple, and he thinks this is another stock that should be in everyone's portfolio. It is a long-term core position. He says that Apple are a company that have a long-term great track record. They get a lot of things right, and they will when it comes to AI as well, although it doesn't look like they're doing, the best right now. He thinks that's all going to work itself out. He also says that they have a very strong ecosystem, and obviously they are very strong fundamentally. Couldn't agree with those two last things more. Next is Tesla, which also features in their granny shot portfolio. And this is a personal favorite of mine. Palantir and Tesla are my two largest positions, and I couldn't be more bullish and more convicted into Tesla if I tried right now, based on the research that I'm doing. And in my opinion, and I've spoken about this before on this channel, and I speak about it every single day on my main channel, which I will leave linked on the screen now if you do want to go and subscribe to that. Tesla is one of the best risk-adjusted opportunities in the market right now. That's in my opinion. And they have so much growth left ahead for them. They are working on some of the most innovative, real-world AI projects. And they are in the process of shifting their entire business to higher margin, larger total addressable market opportunities. Talking about Tesla, they have their Q2 earnings happening tomorrow. And for this event, I am opening a completely free to join Discord server channel. This is going to be a text chat channel instead of a live stream or anything like that. And you can come and join. Like I said, it's completely free. I'll leave a link in the description below and as a pinned comment. Come and chat to myself and other people that love Tesla stock in real time as these earnings are happening. This means that you can come and chat on Discord, but you can still watch your favorite live streams if any other YouTubers are live streaming the event that you follow. Thank you so much for watching this video. Until next time, keep analyzing, keep investing, and don't forget to hit that subscribe button.